July 23rd, Tuesday, guys. We're looking at a very interesting setup. I hope we can take advantage of it so everybody will make a bunch of money. So, still many things are in place. Amazon catches a few more upgrades. VIX has been working as a magic. Every time it hits this upper tunnel range, it drops. So it looks like we're going to be heading back to the 12th handle on the VIX at some point today. Strong action in Apple yesterday above 206, 207 level tells us that the tech is heading higher, guys. The tech is heading higher. The reversal in Microsoft back moving to the all-time highs is happening as well. So the major concern that we observed, that we mentioned in the video yesterday, that's gone. So we're seeing pure buying activity in these key stocks, which tells us technology sector is heading higher. So despite negative headlines yesterday, and there were quite a few, markets actually wants to just, no matter what, move higher, which is exactly what was described in the Tudor Jones documentary that I posted a few days ago. So if you missed that moment in the documentary, guys, go back and rewatch it, because I think it's very, very important to the type of market that we're trading right now. And finally, the earnings so far, we've had pre-market a bunch of earnings reports: BIIB, LMT, PII, Hasbro, WHR, and a few other ones. So we're going to take a closer look in just a sec. As far as the breakout, we're right on track for July 31st breakout. Still, everything stays in place there. As far as the tunnel, we are kind of in the middle of the tunnel range, but we are going to be moving slowly towards all-time highs again. So we're pre-market up a few points at the moment I'm recording this. Likely to revisit some higher levels throughout the day, but not as quick as many people are expecting. So let's focus on earnings today, guys. So you should have this. I send it out through the chat, so check this out. BIB, LMT, HASEDUPI, that's what we're focused on. WHR reported the earnings yesterday, and this observation, I think, is going to be very, very handy to how it would make sense to trade these earnings today. Also save some funds to make sure, not today, do not buy CMG ahead of earnings. But we will trade CMG tomorrow, guys. Plus iRobot, that one typically moves quite a bit on earnings. So guys, get ready. There's going to be some money to be made here. Now, this one we're not trading. We're using this as a case study. WHR, Whirlpool. So notice that this is kind of like what we've seen a lot of stocks do. This is exactly the type of behavior that we've actually seen in the Microsoft. Now we're seeing it in other sectors as well. So move 11, right? Move 11, you get this pyramid, you get a pop and drop type scenario. Now, important to understand that overall in bullish conditions that we are, these reversals, they basically stop where out of the point which from where the stocks break out higher on the initial earnings announcement. Notably, the most important part of this picture is later they go sideways. So far, we have pop and drop in Whirlpool, followed by an action sideways. Now, it doesn't mean that they're not going to start buying the dip at some point today, but it's going to be very difficult for the stock at this point to go from 145 back to 159. Do you see what I'm trying to say? So, in other words, just because we can buy the dip here does not mean that it's going to be a really good trade, because the stock can only move, let's say, to 148. And if you buy these options on a call side at the open, then they're going to carry still somewhat of a premium. And, you know, if this big move back to the 159 is not happening, then it's not going to be, you're not going to lose money, but you're not going to make money. So keep this in mind. For that reason, we're not trading Whirlpool. We may trade it tomorrow if we see some strong volume coming in at these levels here. But initially, it could actually dip to, let's say, 140 level. So that's the main issue with taking a trade like this, is when it makes pop and drop, the highest probability, 70%, is going to keep trending sideways for a couple of days, plus minus a few dollars, without making another huge move to the upside or the downside like this. So keep this picture in mind, print it out so you can focus on this, and this is how we're going to lay it over to the other stocks. So the most important thing to keep in mind today, so the initial pop that I'm about to show you that a lot of these stocks are experiencing pre-market, okay, it is likely to run out of steam, just like on the chart of Whirlpool. I mean, remember last week on Microsoft, best earnings, okay, of so far the earnings season, and the stock pops and drops. And then yesterday they're starting to buy it again. By the way, congrats to those got in on the Microsoft trade yesterday at the open. It's an easy trade. It's the easiest trade that anybody could have taken yesterday. So Gains are not humongous, but they're nice and solid and steady. So congrats to you that took action. Focus on shorting when the market opens. The main idea here is you want to short the pop, and then try to catch the best entry to actually buy the dip. So short the pop, buy the dip. Now, for those of you that have small accounts, you have to watch the PDT rules. Make sure you understand that the way these earnings trades are structured, you may have to occur a day trade. So if you got certain limitations, make sure that you understand that. Okay, so with that said, basically it's kind of like a round trip trade. So Hasbro so far up to 113 from 108 on low volume. What we're expecting is for this thing to actually reverse. So what you want to do is you want to buy puts at the open, and then just split your position, right? You want to step out of the position. So let's say you buy two. Let's say you buy two contracts. Well, you sell one when it gets to 111, 110. You keep another one just in case it's going to keep falling back to this level out of which it started out of. Okay. The same thing here, Lockheed Martin. Okay, we're considering buying puts at the open. It's already creating at the point I'm recording this move 11. You can start seeing that this is the beginning of a move 11, so it's likely to head back to this level out of which it is initiated. Now notice, based on the Whirlpool example, we're not saying that it's going to drop much further below that. Now some stocks, they may not even visit these level here. They may just stop out. They may drop a few bucks, and then that would be the time to buy the dip, because from there they will try to rally higher. But some charts are definitely pointing to the fact that some of these stocks, once they make the move to 11, they're going to have a very difficult time bouncing higher. So far, as far as just the first 30 minutes to 1 hour play on LMT, so these are day trades we're looking to short. The chart doesn't look super bullish on LMT. I know the general uptrend is, but what's happening lately, it looks like when it hits the level 370, 375, they are taking profits. We're not far off this level. There's just a lot of, but see, the blue line right here is at 352, so the probability is going to drop substantially below this level is just not very good, maybe over the course of the next month. But considering the market conditions, it's probably just going to stall out right here at 352 to 357 level, which gives you about a quick, easy $5 possible drop once the market opens. Okay, considering PII, Polaris puts, now this one, the chart is just ugly. It's just ugly, and it is showing the signs of move 11. So it pops from 82 to 90, basically $8 pop on very light volume, and then it starts already to surrender the gains back to the 88. And we really believe this one, based off the longer time frame chart. Just take a look at these guys. Whoo, boy, wow. Look at this situation here. You got the def cross, you got the acceleration volume on the sell sides, you got bearish MACD, accumulation is shot, and they just keep selling. There's no signs of any buying going on here, guys. We think this is a very good, this is probably my favorite one for today. PII puts at the open. Hopefully at the time the market is going to open, it's still going to be up. We certainly don't want to be buying it, getting into puts if it's back already to like 82, 80 level, right? Same thing with EDU. This one is rather bullish on the chart. It does show signs of a couple to handle, but it is being a highly speculative stock. It's up 50% in the last 2 months, so it really made certain conditions to be shorted. And with that said, 102, 105 level puts, based off the longer time frame chart, you can see that last time it got right here to 102, you see this huge bearish reversal candle, and that's what trades pre-market. So it's likely the probability of it breaking above the 102 level is not as great as the probability of it actually making a pullback, and you can easily target your first level of maybe 96, second level of 92. So basically expecting a reversal overall in EDU, but overall chart pattern is rather bullish here. So be very careful. I wouldn't put a huge position on here, but it could be worth taking a shot at this 102 level, because you see exactly what happened last time. And very close to this level, you have another bearish candle, right, from which the stock dropped like 22%. So rather quickly within 2 weeks. This is probably the least riskier trade for today, considering buying BIB. Calls, yes, guys, calls. 230, 235, 240 strike calls. we're actually getting a bit of a variation here. So it pops, it makes the dip. It looks like they're already coming in and buying the dip around the level of 230, 232, which makes sense. Also, look at the accumulation distribution. Actually, as it's dropping, they're actually buying it. The stock has got a rather ugly chart. However, it has very low probability of dropping below this 230 level, despite of all the negative things. While the stock, after bad news, had been stalling out for months, just consolidating around this 230s level, the RSI has actually been climbing. So we got a positive bullish divergence, actually, despite of what appears to be a forming like a bearish reversal crossover here. So if we take a look at some of the other things here, we're basically targeting and seeing same observations on other time frame charts, but we're targeting a level of 246 in this thing by Friday. We think it can get there. Currently trades at 232, so buying 232, 35 to 240 calls with the consideration of starting locking some gains around 245, 246 area. So there's, despite of how ugly the chart is, it actually is a very positive play because the probability of it dropping below is not very good. The probability of a breakout is actually quite good here. So yesterday we had a market move 7. This is how it looks on the chart. So your typical situation of buying the dip, market pops higher, starts selling off. They buy the dip 1, they buy the dip twice, they buy the dip 3 times. 3 times buying the dip equates to the market going higher the following day, which is exactly what we're seeing the futures are doing pre-market so far. 2-day sequence 2-7. Again, the bulls are taking over the market. We're noticing a bit of a spike in activity going into the close when they're buying that third dip. It's confirmed an accumulation distribution. People are actually coming in, starting to buy stuff here. 5-day sequence 2-3-7, 2-7. Looks like 7 is trying to take over the market again. This is what we said yesterday. We observed these double bottom right here, 29.69. We said the market was going to move higher. Yesterday overall was going to be a green day, so that's exactly what we're getting. Notably, basically, this formation tells us that we are going to be revisiting these highs again, the 3,023 on S&P futures. And, of course, the market move for today we're expecting is a solid 7. The main observation for today, so all these stocks that are popping pre-market based off the earnings announcements, they're actually going to make a pullback. It's going to look like things are dropping and they're selling off. It's going to really feel like we're going to a move 2. And so make sure you do not play today as a move 2. You want to come in after the stocks look like they're all reversing and heading lower. You want to close out your puts. You want to buy about 10:30, 11 o'clock. You want to start buying that dip. Ultimately, the market will finish higher for the day after the dip. So still on track for the VIX to hit 11 by July 31st or on July 31st. Numerically still low, so buying calls in the money is the strategy overall. And VIX finished at the lows yesterday, and amazing, right? Every time it hits that tunnel, this is what we said in yesterday's video. Hey, it's going to revisit this level 14.6 one more time, and then it's going to drop. That's exactly what actually taking place yesterday. So there was a pre-market action. So market opens, it hits that level one more time, and it drops. Pre-market so far in the VIX, what, 13.08. So it's reasonable to expect it's going to maybe hit 12.6, 12.7 for the day. Key takeaways, guys, wait for 10, 11 o'clock to buy the dip. If you have an account where you cannot day trade, just wait till 10, 11 to buy the dip and target your best intraday entry. Now, again, some of the easiest plays is still your technological sector is the best place, guys. Your Microsoft, your Amazon, your Google, and so on. But some of the key stocks that we described, like BIIB, based off the earnings report, that would be a good one to buy on the intraday dip. Buy in the money, near the money calls. Buy puts at the open if you have a solid day trading account, and just make sure you steer step out of your gains, because these move lower. It is coming, but it could be rather limited. So target the initial level out of which the stocks broke out, just $1 higher than that, and then just don't expect for these things to completely unwind and crash, with an exception of one that I spent a little bit more time talking about, which was the Polaris trade, right? So around 10, 30, 11, start buying the dip. Basically, reverse out of your trade, so you're going to make money on the drop initially, and then you're going to start making money on the call side. And of course, this note is very important. We are observing the behavior. We want this buying behavior into the close to be the predominant behavior for overall the markets to break out substantially higher from here. So with that said, guys, have an awesome trading day. Make it on the put side and the call side today. I'll catch you guys on the next trade tomorrow.